bit for more on this. Sanjay Mookim is joining us now, strategist, head of India Equity Research at JPMorgan India. Sanjay, good to have you with us here. Thank you very much. Welcome back. Your last note is titled Hunt for Value in India. So where is value, Sanjay? Let's straight off the bat address that.
Well, it's a different concept of value than what is intuitive. And before I answer that question, the way we think about the global macro is that the second half is going to be a little bit more different or a little bit tighter than the first half has been. The first half of the year, you've seen this massive rally in equity prices. Just as the Fed injected liquidity to bail out small banks, it catalyzed a rally in equities everywhere. And if you look at the chart in dollar terms for the Nifty and the S&P, they're the same chart, right? There is absolutely zero difference between the Nifty in dollars and the S&P in dollars. So it has been, and while, sitting here, we look for, specific bottom-up reasons for the market to do well and so on. It's actually, there's a big, very strong global macro overlay explanation for what's happening in India. And that's where the value argument comes in, because as liquidity is now tightening and central bank balance sheets are now starting to contract everywhere, you get this shift from the growthy style and the growth stuff that works to value that tends to work when liquidity becomes tighter. And what we've tried to do in our research is to look for value in a very empirical manner, to say that, look, not to look for stuff which is cheap, but from an empirical analysis, what are the stocks that tend to do well when value as a style does well globally. So that's the research that we put out yesterday. Unfortunately, I can't name those stocks on TV, but there is an interesting set of companies that historically has correlated well when value as a style has worked globally everywhere.
Okay. Sanjay, good morning, and thanks a lot for joining in. I have to ask you about this entire defense, aerospace, space in general, right? This entire vertical that's doing exceptionally well. I mean, Bharat Forge was telling us they are sitting on an order pipeline of around 2,000 crores of defense orders in the export business, and there is order visibility of another 3,000 crores in the domestic market as well. That's the kind of scope. Is this a space that you like even now, despite the kind of rally that we've seen in individual stocks?
We don't actually cover many of these names, unfortunately, but conceptually there is significant tailwinds in that the government has this large indigenization drive, which is catalyzing the export capabilities of a lot of Indian private and PSU companies. And this should sustain, right? India's defense budgets will continue to grow with the economy. The capabilities of Indian defense companies will continue to expand. I can't comment on whether they're cheap enough now after the rally or not. We don't cover many of these. But the underlying structural theme does look to be persistent.
Hi, Sanjay. Good morning. The rural theme or the rural part of the country has been struggling, right? Urban obviously has been doing well. Rural is struggling. But in a run-up to the election, you're expecting spends to improve and hopefully things improve on ground as well. Given that sort of a backdrop, how do you play that? Do you play it via staples? Do you play it via two-wheeler space? Are you positive on any of those themes?
So we've argued that irrespective of whether the elections lead to any sort of spending bump or not, and that's a very binary thing, frankly, we'll see how it plays out, the underlying drivers of consumption in the lower income households. Now, the sort of qualification I'll make here is people tend to divide this into a rural-urban split. I'd actually argue that this is more a rich-poor split, a higher income household, lower income household split in terms of demand trajectories. And the lower income households have struggled through the pandemic because they've had to reduce savings. I mean, there's loss of income, expenditure going up on inflation, and as a result, a weaker balance sheet at lower income households. And there are many indicators that it is being repaired. Whatever data we get on jobs, we can argue, and this is very patchy data, unfortunately, but it does seem like all the jobs that were lost in the pandemic have finally been restored. Wage growth seems to be improving everywhere. Consumer confidence data is starting to look up. So yes, the cohort of the bottom 80% of India, the mid to low income households, does seem to be in a better place than it was previously. Now, it's a question of time, right? How quickly and when do you see the basket of consumption exposed to this set look better? We have argued essentially from early this year that two-wheelers look great, because they've been under pressure for several years now, and you should start to see the recovery. It's playing out, bit patchy, unfortunately, but it is playing out, and we like that space still. And staples, especially the laggard staples, would look very interesting as you start to see, the volume recovery in the lower income households.
Okay, got it. Sanjay, you know, in terms of what you've published out there, and I mean, you've got, you know, the stocks that you like across your analyst team. Just talk to us about the idiosyncratic opportunities. Doesn't need to really be sector specific. Which are the big opportunities from here out? Slightly medium term. I mean, I think very near term, of course, is hard to tell. But what are the top bets, really?
So again, I'm constrained in that I can't name stocks on a channel. But the sectors that we have liked from a thematic structural view of stuff that we cover, we like real estate, and I heard you guys talk about it. The momentum is strong. It will likely remain strong. You know, the penetration of households, apartment ownerships in India is extremely low, and there's years worth of potential headroom for that to continue to grow. RERA has catalyzed, it's changed the way business is done, and we expect that this momentum should be very sustainable. The second space we like medium term is hospitals. Again, there is a lot of shift amongst the consumption of healthcare from public to private, along with, you know, the improvement in medical tourism. You are seeing you know, the advantages of Indian hospitals play out, and you know, valuations can be a bit daunting, but that space also looks very structural to us. A slightly longer term space that we like is, or we have liked historically, is insurance, where you should continue to get the shift, A, growth in the insurance pie, and B, the shift from the public sector to private sector insurance companies.
Okay, by the way, I do want to point out that Paytm is definitely the stock in focus right now. The stock is up almost 74% this year, by the way. And my colleague Hormus very you know, helpfully points out that the stock is at an 18-month high as we speak. Sanjay, I wanted your thoughts here, because many of these platform companies have come back in a big way, right? Whether it is, you know, some of them like Paytm delivering good returns, Zomato's being profitable for the first time. What is your thought here? Do you in general stay away from these new age platform companies, or are you doing some, you know, nibbling in here?
So in my model portfolio, I have none of these, right? And
okay.
There is fundamental improvement, to be honest, and these companies have delivered numbers, turned profitable, let's say, faster than analysts had forecasted. At least some of them have. There are some which are struggling for cash flow and profits even today. But the reason I am a little bit suspicious myself is that, look, establishing valuations for some of these is very difficult still, because a lot of the potential cash flow for these businesses is very back-ended. And that makes this kind of companies, the platform companies, very susceptible to cost of capital assumptions, to how optimistic you are of the future, etc. So these are very high beta stocks. And if you see, they have worked exactly in line with the growth trade globally. When tech was doing well everywhere in the world, Indian platform company stocks have also done very well. And since I've argued earlier that that growth style is now going under pressure and it's turning down, it may not be very advisable to chase these stocks after this big rally anymore.
Okay, all right. We'll leave it at that, Sanjay. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. Well, that's the word coming in on the market, which, by the way, is